All right. Hello and good afternoon, and thank you for coming to the last of the Money Matters 2023 programs hosted by the Office of Consumer Protection. Today's program is Disaster Preparedness for Consumers. What can you do today? So on our agenda today is I'll be introducing the speakers and the program. We're going to define what we mean by a disaster, cover emergency plans, how to safeguard your finances, the insurance and fraud angles that you may end up facing if you are experiencing a disaster, resources, and then questions at the end. If you have questions, please put them in the chat or in the Q&A. I'll be monitoring the questions as we go along. And without further ado, I would like to introduce Emily Hickox from CCCSMD, Patty Dorn from the Maryland Insurance Administration, and Lauren Chilton from the Office of Emergency Management for Howard County. I'm Tracy Bresvani for the Howard County Office of Consumer Protection. So those who may not be familiar with the Office of Consumer Protection, basically we help consumers resolve disputes with businesses and with their landlord. In the process of doing that, if the law is broken, we do also have enforcement authority to correct behaviors that are unfair or deceptive, and also be able to fine and take other action. We do a lot of educational programming. This is one of many on webinars or in person. We are available, and our webinars are on our YouTube channel, HOCO Community, under the OCP playlist. Lastly, we license trespass tow companies, peddlers, and solicitors. So over the summer, when folks come door to door, they should hopefully have our license. So what is a disaster, and what do we mean, and what do we want to cover today? Because obviously there's many kinds of disasters. But first, we need to start with what is a hazard, and that's basically a situation or an event that could lead to a harm or difficulty. It could be human-based or it could be natural in origin, right? So an example of a financial hazard, which we'll be talking about down the road, is you have a fire or a flood that can result to not only damage to your home, but to your financial documents and the like. And so how do we minimize those hazards? Now, a disaster in turn is a serious inability to cope with a given hazard, whether it's this lack of training, lack of preparation, or resources. And so that could, in our situation, it could be not having a digital backup of all of your important documents, or if there's a fire, maybe not having enough resources in place to be able to deal with anything that insurance doesn't already cover. Disasters could be individual. You know, your tree falls through your house, that's an individual disaster. If there's a flood that comes through, or a tornado that comes through and takes out several homes, or most of the homes in a particular community, that's a community-based disaster. So the scale could be small or it could be large. And so this would apply, this program would apply to both of those scenarios. And so I would like to turn this over to Lauren from the Office of Emergency Management, who can talk to us about how to prepare for the unexpected.
All right, well, good. Thank you for that introduction, and good afternoon, everyone. I'm an emergency management specialist with the Howard County Office of Emergency Management, and today I'll be taking you through the our 4 steps that you need to take to get prepared for really anything that's unexpected, whether that be an individual disaster or a community one. Next slide, please. So the first step is to get informed about what kind of hazards you should prepare for. So you'll want to look at things that actually happen in your area. For example, Howard County, we experience flooding issues, maybe some power outages due to extreme temperatures in the summer and the winter, and even some tornado activity. So understanding these hazards will provide you with a good framework to plan within. And so in order to, and another source you can use to learn about hazards in your area is the Howard County Community Hazards Handbook that we have on our website, which goes into, or has a little snapshot of all of the natural hazards that affect our county. And so you can, if you'd like to take a look at that and kind of look at how likely those things are to happen in the county, then that can also help you get prepared. The second step within getting informed is to create a support network. So including those around you in what you have learned and also letting them know your intentions and your emergency plans will really help you when disaster strikes so that you have that support, and you'll want to make sure that you all decide on a way that you'll communicate with each other, whether that be a group message or if the phones go down, are you going to meet somewhere in town or in a different town or maybe another state over? Just really kind of planning for the worst. And then next, you'll also want to consider saving for an emergency. So you'll want to think about things like what are your monthly expenses? What are your insurance deductibles? And where will you stay if your home is damaged or destroyed? These are very scary things to think about, but it is important to get ahead of this sort of thing. Next slide, please. So our second step in preparedness is to make your plan after you've become informed. So focusing on saving for emergencies, this can be difficult depending on your financial situation. But for starters, trying to put aside like $500 to $1,000 if you can is a great first step. This can help you get a hotel if you need it, food, gas, and maybe some extra clothes if you need for a couple days. And it's really depending on the size of your household as well. However, the ideal amount to have saved is 3 to 6 months of expenses. You don't have to necessarily put this money somewhere where it's just going to sit there. You could maybe have some sort of savings account where this money can grow as well. But you do want to make sure if you put this money into that kind of account that you can withdraw it whenever you need the money, and there's not any restrictions for that. But you also want to, like I mentioned earlier, save money for your insurance deductibles, and I'll let my colleagues here elaborate on that further. And at the same time, you'll want to think about, how much cash you need to keep in your home. Because during disasters, sometimes power outages can affect your online banking. They can affect your ability to withdraw cash at ATMs. The bank might be closed if the disaster affected the bank, like the people who work there are probably at home helping their families as well. So it's a good idea to have enough money set aside that you can focus on the bigger picture of ensuring everyone in your household is safe and then tackling any insurance claims that you need to make. But when you are considering the amount of cash to keep at home, you'll want to check with your insurance to see how much cash you're insured for, because a lot of homeowners' policies only insure about $200. So, if you lose any of the other cash that you've been stashing at home, then that's money down the drain. But you also want to keep this cash in smaller denominations as well. Because if you keep it in really big dollar bill amounts, those might be hard for local businesses to break, especially during a disaster. Next slide, please. All right, so you've got the amount of cash that you've decided to keep at home. So how and where should you store this stash? So you'll want to choose an easy spot for you to find, but not anybody else. And you'll want to spread your money out and keep it in a waterproof and a fireproof container. So don't put it in the classic places like under your bed. Got a picture here. That's one of the first places that someone with ill intent might look for money. Or if you have pets, they might be under there and mess with your cash. But also, don't put it in places like the freezer either. Another classic place to hide money. So basically, I did an online search of best places to hide money in the house, and if don't put your money in any of those places that pop up online immediately. But yes, put it in a place that's very unique to you. And like I said, keep it in smaller denominations. And then you'll also want to keep some in your emergency kit. So that way you'll just immediately have a kit with some money in it that you can grab and get out. Next slide, please. So what else do you need to include in your emergency plan? So you'll want to make sure that your written plan includes where your cash is going to be and how to access it, and also include where additional funds can be drawn from. So how to access your emergency funds that might be in an online bank somewhere, especially if you're incapacitated and your family needs to access that money. You'll also want to include how to evacuate your home and where that emergency kit is located, as well as a rendezvous point or a meeting location. We recommend choosing one outside the home that is familiar for local emergencies. Then, like I said earlier, you also want to choose a rendezvous point that's outside of the area in case the disaster is wide-reaching. And then finally, practice makes perfect. Practice with everyone in your household, no matter how young, and make sure that if anybody has any like access issues or anything like that, that everyone practices the plan and can get where they need to go. If you need help writing this kind of plan, our website has templates for individual households as well as businesses, and these will walk you through exactly what questions you need to ask and what items to consider having at home, as well as how to get involved in your community's emergency planning. And there's that link at the bottom. Next slide, please. Third step is to build a kit, like I mentioned earlier. You'll want to think about your financial essentials and also your basic needs essentials. So you'll need to keep copies of your important documents. And this is another thing I'll let my colleagues elaborate on later in this presentation. And also, like I said, that emergency cash, you can keep some in your kit. And then for basic needs, you'll want to think about what you would need to shelter in place for 3 days, or what you would need to shelter somewhere else for 3 days. So this list that you can see, we've got flashlight, medications, non-perishable food and water, change of clothes. This is not an exhaustive list. The link before this on the previous slide does have more, or those templates have like a longer list of things to consider having. And please don't feel overwhelmed with it. Sometimes thinking about building these kits seems like, oh, I'm gonna have to drop all this money on building this kit. But if you just keep it in the back of your mind, and each time you go shopping, maybe buy one little thing for your kit, you can slowly build it up over time. Next slide, please. The final step is to get involved. Getting involved in your community's emergency planning allows you to keep your finger on the pulse of emergency preparedness in your area and events like this one today. For example, our local emergency planning committee meeting meets every quarter in a hybrid format, so you can attend virtually and learn about emergency preparedness topics. Maybe sometimes we have trainings as well. You can also follow my office on social media. We post emergency preparedness tips, and the fire department also provides free hands-only CPR and stop the bleed training. You can email them at that link there or give them a call. Next slide, please. So that is all that I have for y'all today. Here's my contact information. And there's our Twitter and our Facebook, but you can also email us if you would like us to put together any emergency preparedness training for your maybe an organization you're a part of, and we can figure out how to meet your needs, and we can also answer any other questions that you might have. That is all that I have for y'all today. Thank you.
You. All right, now we're moving on to financial planning for disasters with Emily Hickox.
Good afternoon. Thanks, Tracy, and thanks, Lauren, for all that really great information. I want to build upon some of the things that you talked about, but just such important information for everyone to know. You can go to the next slide, please. So what I'm going to talk to you about today is safeguarding your financial documents and also about passwords. So what do you want to safeguard? Lauren gave us a good list of a few things that you want to keep copies of, but it's also important that we know where our originals are of those documents. There's going to be lots of times throughout life in disasters and not in disasters where we're going to need original copies of some key items. So I have a list here of things that you want to consider, some of which people don't really think about. So birth certificates and social security cards and passports, those are things that typically come into your mind when you think of key items that you want to safeguard. But also vehicle titles and the deed to your home if you have one, and your will or power of attorney. Those are also items that you might have both originals and copies of. So these originals we want to take really good care of. Also, if you have some key medical records that are very important that you don't lose, things that you have gone through in your past that you want to make sure you have that someone might need to know in case of an emergency and something happening to you, you want to make sure that's in there as well. So let's talk about for a second about how to safeguard them. I want to focus mostly on flood and fire, as those are pretty common disasters or hazards in our area. So you want to make sure that you're storing these originals in a place that's safe from flood and fire. And you might have seen a lot of fireproof safes or fireproof boxes, they're called. Those are great things to have. Something else to think about, though, is putting those documents inside a plastic bag within that fireproof safe. That's actually something that I learned when we were all planning for this presentation and immediately made changes to my fire safe box. So thank you, team, for that little tip. A fireproof box, I wanted to share that it can be purchased for $50 to $200 depending on the size. And why that I wanted to share that is because I don't want that to be a barrier. I don't want you to be worried about the cost. Saving up for something like that or allocating a part of your portion for something is really important because this is something that you really are going to need long term. And you can do a quick search on Amazon. There's lots available. Make sure that the box that you do buy can be locked with a key, a combination lock, or even both. And then think about how you're going to store that key and keep that combination safe. You can go to the next slide, please. The other thing we want to think about is that there's other documents that you want to keep safe that you may need to quickly access in an emergency or within the first few days of encountering a disaster that aren't originals, that aren't things that you would think of as keeping super secure. So one of them is actually copies of those key documents we talked about on the last slide, and Lauren mentioned it as well, that those copies are important to keep safe. Also, current statements for your financial accounts. Even though I know a lot of us get our statements electronically now, it's good to know where they are electronically. That it's important to access that. But every once in a while, it's good to print out a statement and keep that in a safe spot as well. We're checking and savings accounts. Those are the types of accounts you want to keep statements for, as well as any retirement or college savings accounts. I know a lot of folks have college savings that they've set up for their children in possibly a 529 account, and we forget about those. So that's something to think about, that you want to every once in a while grab a statement from there. And then, of course, we have our insurance policies that we're going to hear a lot more about in just a little bit. But you want to keep the latest version of those handy. It may be, it may be easy for you to access somewhere online, but having a hard copy accessible to you is never a bad thing to have when you're faced with an emergency. So how do we safeguard these documents? Because eventually you're going to run out of space in that fireproof box, and you want them in other places too. So you want to keep these copies in a safe, dry space. So it could be a drawer of a metal filing cabinet, and just avoid storing them in the basement of your home. And probably even the attic isn't a great space, thinking about places where floods and fires may begin. You want to tell someone you trust where the documents are. This is a really hard one because you need that person to be somebody outside of the home, ideally. And I remember about maybe 10 years ago when my parents told me where their key documents were, and I felt like I was officially an adult when that happened. I was like, I made it. So, they know they can trust me, and, you want to think about who is somebody you can trust, a close family or friend that that's going to be there for you and your family in an emergency. You want to know where to find your insurance information. So you might have your insurance information stored on an app on your phone. You might have a card in your wallet. Just know where that is. I always think about this when I go camping because I have special insurance for my camper, and unfortunately I've needed it. So as soon as we start driving, I think in my head, okay, where's the insurance card? And I make sure I know that. So knowing where these things are in advance is really going to help you feel prepared in an emergency. You go to the next slide, please. So let's talk just a little bit about passwords. Passwords are, becoming a difficult conversation because we have passwords for so many things now. I got locked out of the Fitbit app for like 2 solid weeks. So, it's just passwords for everything. We try to be safe and make them different, but they're hard. It's hard to remember all of them. But what you want to think about in the case of emergency is what would you need access to if you experience a flood or a fire? You won't need access to your Fitbit app, but you may need access to a couple of other more important things like your checking and savings accounts, your insurance accounts, those retirement and college savings accounts. You might not think about that, about needing them right then and there in the emergency, but eventually you're going to want access to those accounts. And utility accounts as well, if you need to deal with your utility companies when you're going through these emergencies. So in addition to the account numbers and passwords, you want to think about storing answers to your security questions. That's always a tough one too. So make sure you kind of have these things in your mind. And then let's talk about how to safeguard them. So I think a lot of us have become pretty reliant on browser memory and the browsers remembering our passwords for us. But you have to remember that that's not always going to be the answer, especially in a disaster. If your computer is lost in the disaster, then that browser is not going to help you get into your accounts. So you want to think of alternative storage methods. I know a lot of people have little books that have their passwords in them, and as long as you're keeping those in a safe place, that's a good thing. But there's a lot of apps out there that can store your passwords essentially on the cloud. Just when you're looking around for those, I recommend considering the reviews and the history of the company. Just make sure that you're doing your due diligence to feel comfortable with the app or the company that you're using. And if you do like hard copy, keeping a hard copy of your passwords is okay, as long as it's, again, somewhere safe where it's harder for people to find, but also safe from the disaster. So you could put that in your fireproof box. The hardest part about that is remembering to update the password list every time you have to make changes. So, when you get locked out of accounts, like I do all the time, you got to go make changes to that. So that's just a little bit on securing passwords. So just a little bit about CCCSMD. We are a nonprofit credit and housing counseling agency in Columbia. And we have we do mostly one-on-one counseling, and we also have group education like this. So we're just grateful to be a part of this.
Thank you. That was very, very useful, and it gives everyone, including me, some ideas for the weekends coming up. Last but definitely not least, I'd like to introduce the next segment, which is the role of insurance in recovering from a disaster. And I'm going to turn it over to Patty Dorn. Oh, we can't hear you, Patty.
Cannot hear me?
Now you can. Yes, perfect.
Okay. All right, well, thank you. Thanks, Tracy. I'll just get started. The role of insurance in recovering from a disaster. I am Patty Dorn. Next slide. So I'm with the Maryland Insurance Administration, and just so you know who we are the Maryland state agency that regulates the business of insurance in Maryland. That means that we're the entity that licenses the insurance companies to do business in Maryland, as well as agents and brokers. It's our responsibility to make sure that they follow Maryland's laws, as well as applicable federal laws. It's our responsibility to make sure that the insurance companies in Maryland are solvent. So we're making sure that they have the money to pay your claims. We also make sure that the premiums that they charge to you are adequate. They need to be collecting enough money to pay your claims, but that they're also not excessive or unfairly discriminatory. And we're the entity that you can file a complaint with if you have a complaint against an insurance company or an insurance agent or broker. Next slide, please. This just has some examples of reasons that you can file a complaint against an insurance company, agent, or broker. But I just want to say, if you have a complaint, just file your complaint. You know, common complaints are if a claim has been denied or payment is slow, etc. Terminations of insurance that you didn't think were fair. Those are all great reasons to contact us. You can call. Some things we can deal with on a more informal basis. Most things you're going to be filing a complaint for, and do not hesitate to do that. Absolutely. All right, next slide. All right, so we're going to talk about the role of insurance in recovering from a disaster. What would you do if this happened to your home or business? It's just some examples: flooding, fire, etc. Things that we all know can happen. Next slide. So ask yourself, first of all, do you have homeowners? Do you have the right homeowners coverage? Review your policy, determine what's covered and what is excluded under your policy. Do you have coverage for windstorm damage? You probably do. So most policies are going to cover you for windstorm damage. Debris or tree removal. If that's important to you, is that covered? For the most part, there's going to be some pretty low limits with debris and tree removal. You might only get something like $500 worth of coverage. So just know what those limits are within your policy. Water and sewer backup. So that's backup, failed sump pump situations, etc., where water is coming into your basement through pipes that are essentially designed to carry it out instead of in. Water and sewer backup is not, it's not part of a standard homeowners insurance policy, but you can add it on. And by law in Maryland, they have to ask you if you want water and sewer backup coverage. So it's something to think about. And it's something that I talk about a little bit more in this presentation, but it's something that you decide whether or not you want added on to your homeowners insurance policy. And then additional living expenses. Most homeowners insurance policies do come with additional living expenses. And what that is that's coverage if you can't live in your home. So you're a homeowner and say you can't live in your home for 12 months. You still have to pay that mortgage. But this is coverage for you to rent an apartment, rent a hotel, rent a house, etc. And that would be covered for you, when you have to stay somewhere else. Next slide, please. So you're going to, every year or anytime that you make changes to your policy, you're going to get one of these declaration pages. It's really important to take a few moments and review those declaration pages. It probably looks a little bit small right now, but I can easily tell you it's going to show you the coverage limits. So it'll say the dwelling, that's the house that you're insuring. Coverage limits of $250,000 for the dwelling, and it'll tell you what all those different coverage limits are. It's a great opportunity for you to check and make sure that those coverage limits work for you, but also make sure that you understand what all those coverage limits are. And if you don't understand something that is on your declaration page, just take a moment to reach out to your agent or your broker and have them explain it to you. So that way, you can't tell if you have the right coverage for a situation if you don't understand what that line is. And so make sure that you understand everything that is on your declaration page, and that'll help you protect yourself and make sure that you have the right insurance. Next slide, please. So make sure that it's insured, your home is insured to enough to repair or rebuild your home in the event of a disaster. A lot of people say 80%, make sure it's insured to 80% of the cost to rebuild your home. Well, I think you should probably go for 100%. I mean, you're probably not going to want to be paying the rest of that out of your pocket. So make sure that your home is actually insured to what is going to cost to rebuild the home. Your insurance companies will stay on top of that. They will, that's a lot of the reason you're going to see rate increases. Maybe the cost to build your home went up $10,000 from last year. You might see a rate increase for that. Ask your insurance producer or insurer about purchasing coverage to protect you against inflation. So those bumps in what it's going to cost to insure your home, they might not keep up with inflation. If that hasn't changed in a year or 2 years, and the cost of building materials has gone up 10% and you don't have protection against inflation, again, you might just end up paying for more out of your pocket than you expected. Notify your insurance producer, agent, or broker, or the insurance company directly if you make improvements or additions to your home to ensure that they're covered. So if you added on a room to your home, or you, remodeled your kitchen, dropped a lot of money doing that, you need to tell them that so your insurance is covering you for what you want it to cover you for, which is probably 100% of the cost to rebuild your home. Determine whether you need additional coverage for antiques, collectibles, jewelry, computers, etc. So an easy example of this is jewelry. There's a good chance that there's a coverage limit of only $1,500, $2,500 for jewelry within a standard policy, so within your policy. If you have a collection of items, or if you've splurged on some expensive paintings, if you have a jewelry collection, you're going to want to talk to your agent or your broker about making sure that that is actually insured under your policy. Talk to them about what you have, talk to them about the policy itself, because you might have to list it separately. It's called scheduling the items. And then, you are going to pay more in premium to cover those items. But just know that when it comes to collectibles, jewelry collections, etc., expensive art, not necessarily covered under a standard homeowner's insurance policy. Next slide, please. All right, know the difference between an ACV policy and an RCV policy. Make sure that you know what you have. Ask your agent or your broker, is this actual cash value, or is this an RCV, replacement cost value policy? Also, it will state it in your policy itself. ACV policies are cheaper than RCV policies. So in some situations, they look more appealing, but you get what you pay for. With an ACV policy, if you have a roof that's 40 years old and a hailstorm comes in and destroys your roof, your insurance company is going to say, well, that roof has lived 80% of its life. It is destroyed now, but it lived 80% of its life. Here's 20%. And that's probably not going to make you happy. And another easy example that I use sometimes is like my office chair that I paid $200 for at the beginning of the pandemic. If I had a house fire, something like that, the chair was destroyed, they're going to depreciate the cost of this office chair. And they're going to say, okay, well, maybe you used $50 worth of office chair, whatever that is, here's $150. But if I have an RCV policy, number one, they're going to replace my roof after the hailstorm. And number two, they're going to replace my chair with what my chair is selling for today. So it's, $225 today. Essentially, I'm going to receive $225 to replace my chair new. That's the difference between the ACV policies and the RCV policies. So important to know. Next slide, please. Most homeowners, renters, condo insurance policies exclude coverage for mudslides. Okay, not a huge concern in Maryland. Earth movement, earthquake, also not a huge concern in Maryland, but those of us who were in Maryland in 2011 felt that earthquake, and we know it can happen. Earthquake coverage is not covered under a standard homeowners insurance policy. You might be able to add it on, just like kind of you do with the water and sewer backup, like an add-on to the policy, and it might be a separate policy. If you want coverage for earthquake, you need to talk to your agent or your broker about that situation. Groundwater or seepage. So that's going to be water coming in from basement walls. There isn't any coverage for that under a homeowner's insurance policy, nor are you able to purchase coverage for that situation. Flood insurance, that's a big one. Homeowner's insurance does not cover flood. Some private insurers might offer it as an endorsement. That is rare, where you can add it on like you can water and sewer backup, etc. But that's a rare situation. For the most part, most Americans are purchasing their flood insurance from the National Flood Insurance Program. You can find out your own flood risk at floodsmart.gov. Next slide. And if anyone has any other questions about flood, we can talk about it more during the Q&A also. Know what your deductibles are. And, you know, Lauren touched on this a little bit because you need to know what they are, and you need to make sure that your deductibles match the cash that you have on hand, because that's your responsibility before the insurance company starts to kick in. Your deductible is what you pay first and foremost, and then the insurance kicks in. Know what your deductibles are and make sure that your deductible works for you. The higher your deductible, the lower your premium, okay? It's not unrealistic to have a $5,000 deductible with homeowners insurance. Higher your deductible, the lower your premium. But just know what you have and make sure that you have the cash on hand, not necessarily in cash, but money that you can easily access for that situation itself. Super important. In Maryland, your homeowners insurance policies are allowed to have 2 separate deductibles. So I'm going to use the example you chose $5,000 for a flat rate deductible. Okay, so $5,000 is your responsibility. Then the insurance kicks in. That's easy enough. That could be used for fire, if there's theft, etc. But in Maryland, the policies are allowed to offer or to include a second deductible that is used for higher risk situations. And by that, I mean a higher risk situation to the financial solvency of the insurance company. So a fire, it's usually a pretty isolated situation. Maybe it's a house fire, maybe it spreads to another house if it's a row house, etc. But it's pretty isolated. What isn't isolated in Maryland is windstorm damage. Windstorm damage can do catastrophic damage to a large area, and the insurance companies want to recapture more of that, more money if there is windstorm damage. That is usually what this special percentage deductible is reserved for in Maryland. Now, it doesn't have to be for windstorm damage. They can literally use it for whatever they want. But for the most part, it is kind of thought of as a windstorm deductible. And it's written as a percentage. So your $5,000 deductible that you chose for this policy is not going to apply if the damage is windstorm. The percentage deductible is what's going to apply. The example at the bottom says if your dwelling is insured for $100,000 and your policy has a 2% deductible for certain perils, the deductible would be $2,000. So it's a percentage of what your dwelling is insured to. So if your dwelling is insured to $100,000 and it's a 2% windstorm deductible, then that deductible is $2,000. Now, that's an easy math example. The reality is your home is probably not insured to $100,000. The reality is your home is probably insured to something more like $300,000, $400,000. So that means in that situation, a 2% deductible on a home that's insured to $400,000, that's an $8,000 deductible. Know what you have. Know what your deductibles are. If you know I can't come up with $8,000, then you need to work with your insurance company to find a deductible that works for you, or you need to shop around and potentially find a different insurance company to go with because you want your deductible to work for you. Next slide. All right, so a little bit more about flooding. Homeowners policies don't cover all types of water damage. They don't cover flooding. The terms of your homeowner's policy will determine what types of water damage are covered and the amount of coverage that's available. And the next couple slides are going to go into a little bit more detail. Next slide. So this A standard flood insurance policy defines flood as, and I'm not going to read this whole thing, but essentially flood is rising waters coming from a stream or a road. It's rising waters and it's coming from outside. Okay. That's the definition of a flood. So as a homeowner, you might be thinking, okay, a pipe burst in my house and I had a flood. That's not covered. She said homeowners insurance doesn't cover flood. No, that is covered. The definition of a flood that we're using here is going to be those rising waters coming in from the outside. Next slide. And so within your home itself, you do have coverage for water-related water damage situations. If you have water and sewer backup, your homeowner's policy will pay for the damage that's done by the water and sewer that backs up into your home. Subject to terms, conditions, and limits. They have to offer you the same amount. So say your dwelling is insured to $300,000. Technically, they have to offer you $300,000 worth of water and sewer backup coverage if that's what you want. You're going to choose the amount that you want with regards to water and sewer backup coverage. A little statistic for you, in 2016, the average water and sewer backup coverage claim in Maryland was $15,000. I think 2016 is kind of a long ways away in terms of how much things cost today. So, you know, maybe the average might be coming in at $25,000, $30,000 now, but that's just an FYI to you. The scope and the amount of water sewer coverage will be determined by the policy and the way it's written. Maryland law, oh, I already said this. Maryland law requires that your insurer offer this type of coverage with the same limits as dwelling coverage. So you can go all the way up to the limit of your dwelling coverage when you're choosing how much you want for water and sewer backup. Next slide. So if a pipe in your home suddenly bursts and water, you know, it's all over the floor, this is generally covered by your homeowner's insurance. But generally the repair or replacement of the pipe itself is not covered. If you have a slow leak, regardless of when you discover it, most homeowners' policies will not cover the damage from that leak. Okay, so stay on top of this. If you suspect that you have a slow leak, take care of it as quickly as possible because your homeowner's insurance might deny that claim. So essentially they're saying, no, that's been going on for months. That's been going on for years, and you're not going to have coverage for that under the policy. So stay on top of those situations. It's important during the winter that you maintain appropriate heat in your home, especially if you're planning on being away for an extended period of time. If a pipe bursts due to your failure to maintain appropriate heat, this loss may not be covered by your insurance policy. That is your responsibility. Next slide. If rain enters your home through the roof is properly installed, properly maintained, typically covered. If rain enters through doors and windows, this is going to depend whether or not it's surface water and if it enters from the ground level. Okay, so is it rising water or is it water coming from the sky? Again, that's the difference between what's covered under your homeowner's insurance and what is actually defined as a flood and what would be covered under flood insurance. It's important to know that if you're in a high-risk flood zone, your lender, if you have a lender, they're going to make you have flood insurance. Beyond that, beyond the high-risk flood zones, you decide on your own whether or not flood insurance makes sense for you. Next slide. So if you are interested in flood insurance, most people do purchase it from the National Flood Insurance Program. You don't have to call them directly, but you certainly can. In a lot of cases, you can work with your agent or your broker and they can purchase it. They're essentially licensed to sell you the product from the National Flood Insurance Program. And it's not going to matter who you go to, you're going to pay the same rate, no matter who you go to if you're purchasing it from the NFIP. The private market of flood insurance is expanding. So the National Flood Insurance Program is less subsidized than it used to be, which is opening the door to the private market. So it's possible that you could find a better rate for flood insurance on the private market. It's also possible that you could find more coverage. So that is a possibility. Again, it's just it's just a small fraction right now of the flood insurance policies in Maryland, but it is growing. There's also surplus lines carriers. These are insurance companies that are not licensed in the same way in Maryland, and you do not have the same protections when you purchase from a surplus lines carrier. However, for certain situations, a surplus line carrier policy does make sense. So if you find yourself in a situation where you need, say, high levels of coverage, et cetera, and you can't find it through the flood insurance program and the private market, then the surplus lines carriers are a possibility as well. And if you want to learn more about that, we have more information about that on our website. Next slide. Okay, auto insurance. Comprehensive is what is going to cover you from certain events other than collision, theft, vandalism, hail, flood, hitting an animal. So a lot of people think about auto insurance in terms of liability only and full coverage, and that's fine. Liability only, you know, that's just protecting the other people on the road from you. Most people carry full coverage that covers their vehicle if they're in an accident, and it includes this comprehensive coverage other than collision. So theft, vandalism, hail, flood, hitting an animal. Comprehensive coverage, you'll see that deductible on your policy. Next slide. If you purchase it and your vehicle is damaged due to a storm, you call your insurance company to file a claim, make sure that you take photographs of the damage, etc. So, you know, if you're a liability only person, but you're thinking, well, all right, it's not worth having collision coverage because, you know, at this point, my vehicle is only worth a couple $1,000s and I don't want to pay that. That's a rational choice. Everyone has their own sort of point in which they say, I'm going to self-insure this. And some people drop the full coverage and just go with liability. Just know that you can have liability and comprehensive together. So you could have liability and comprehensive and not have the collision damage to protect your car. So that is a possibility. So if you get to that point where you're like, I don't think it makes sense to have collision coverage anymore, my vehicle's not worth that much, consider keeping the comprehensive on it because in general, the comprehensive isn't very expensive and it will protect you in case, you know, your car is flooded, etc., those kind of situations. Next slide. If your vehicle is determined to be a total loss, your insurer has 10 business days to reach a settlement offer with you. The offer reflects the actual cash value of the vehicle prior to the loss, so at sort of just before the loss, minus the amount of your deductible. And if you know you have issues with that situation, you can always file a complaint with the Maryland Insurance Administration regarding whether or not your vehicle is totaled or not totaled. Next slide. Okay, quick, fraud watch, contractors. So you're in a situation where you have damage and you are thinking about, or you need to hire a contractor to fix the situation. Next slide. Get multiple written repair bids if possible. If possible, because sometimes it's just not possible. You know, there's too much widespread damage in your area, etc., but definitely try. Make sure that that includes all the costs and what work will be done, etc. Don't accept a bid just because it's the lowest, and don't fall for somebody saying something like a special hurricane deal or a limited time offer, because literally none of this information needs to be involved with insurance, you know, or contractors and rebuilding your house. Okay. So if somebody's talking that kind of talk to you, I would definitely probably just close the door and keep moving and try to find somebody else. Don't pay for repair bids. If somebody comes in and charges you $250 or wants to charge you $250 to tell you what it's going to cost to fix your home, that's a situation that you need to walk away from. They can simply just take your money and disappear. Reputable contractors, for the most part, do not do repair bids. Try to use established local contractors. Be careful if somebody arrives to your house in an unmarked vehicle, and be careful of people going door to door, you know, essentially selling their services. They might be unlicensed. They might be from another state. Now, if there's widespread damage, Maryland needs can sometimes need people from other states. It makes sense for them to come in, but make sure that you know who you are dealing with. And, you can always check and make sure that they're licensed, check and make sure they have the proper insurance. You can check with us to make sure that they have the proper insurance, etc. So just be careful when you're dealing with contractors after a disaster. Next slide. Public adjusters. You can hire licensed public adjusters to help file and negotiate your claim. And a licensed public adjuster will generally charge for their services. Next slide. So your insurance company is going to send out an adjuster. And they're going to say, okay, this needs to be fixed, this. Okay, $100,000 worth of damage. You as the homeowner might disagree with that. You might say, well, what about this and this? And there's no way this is just $100,000. This is $140,000. You can go back and forth with your insurance company and deal with the situation yourself. Some people choose to hire a public adjuster. So the public adjuster is somebody who works for the public. They work for you. You can hire them and they can say, okay, yeah, I think this is $130,000 worth of damage, and I think this needs to be repaired as well. And they can go back and forth with your insurance company. It's important for you to understand that they are going to charge you a percentage of what the insurance company is going to give you. Okay, so if they're charging you 20% of that, say, let's just say $100,000 for easy math. If they're charging 20%, you're going to lose $20,000 that would have gone to fix your home. In certain situations, this might make sense for you, but make sure that you understand exactly what they're going to charge and make sure that you understand whether or not the situation makes sense for you. Does the math make sense for you? Public adjusters, this is a legal profession in Maryland. You can certainly hire them and they can certainly help you with your situation, but you need to make sure that you understand the math that's involved, that you understand how much you could potentially be paying them. Make sure that they're licensed by checking our website. And, just know they can investigate, they can appraise, they can evaluate, give advice, they can assist you in adjusting the claim and negotiating with the insurance company. But this is a service that you are going to pay and you're going to pay a lot of money for it. So just make sure that before you hire a public adjuster, it makes sense to you and that you understand exactly what you're getting into with regards to how much this might potentially cost you. Next slide. All right, this is just my contact information now.
Well, thank you very much. That was incredibly informative and chock full of goodies. This would be a good opportunity if there's any questions to put it in the chat box. And then I can read them out for folks. I can get it started because I had a question. We talked about where not to put the cash under the beds or in freezers, but with these kits being sizable, other than not putting them in the basement for obvious reasons, do you recommend, putting them in like outdoor storage sheds that have a lock on it, for example, or in the garage, if there is such a thing, or putting them in some kind of like third-party storage unit?
I think it would be, first you want to place the cash where it's easy to get if you need to evacuate your home quickly. So if your evacuation route takes you past like an outdoor shed, like it's in your backyard, then yeah, that might be a good place to keep it. But or having some cash hidden off site, that works too. I think it's really just up to like up to you and in your emergency plan and where those routes are. And oh, sorry, just saw that in the chat.
Yeah, I see. I have a question.
Yeah,
Why is the freezer not recommended as a place to store important papers?
sure. So the freezer is just a well-known place to hide things. And so it's if someone is entering your home with ill intent, that's probably going to be one of the first places they look. Also, you got to let it melt to get it out. So that might take some time. Might be a little messy if you're trying to get out quickly as well. But yes, that was.
Got it. I have a question about the slides. So the slides should have been uploaded to your WebEx invitation. If not, we are recording this, so this will go up on YouTube, and we'll have the slides connected with that YouTube entry. And at the end, I will send out an email to all registrants with the link to the YouTube recording. So you will get the slides that way. Any other questions for our panelists?
I
All
had
right.
a quick
Go ahead.
question.
Sure.
So I'm kind of wondering, or I'm a renter myself, so I was kind of wondering what kind of, I guess, what kind of insurance, like bad situations can you get into with renting when it comes to your coverage and disasters?
Okay, so it's important for you to know that your renter's insurance is going to cover your, the things that you own, right? You're not covering the structure itself, etc. And so I would just make sure that the policy covers essentially, what you own. But I think the other thing to think about is, and so in most disaster situations, your renter's insurance is going to cover the things that you own. However, flood is separate. And so if it is a flood, just like with a homeowner's insurance policy, your renter's insurance isn't going to cover it. There is flood insurance for renters. I would consider it if you're in a higher risk flood zone or if you know that there's a risk of flood in your neighborhood. However, if you're renting an apartment, on the second, third floor, something like that, it's much, much less of a concern for you. And so it's much more of a concern if you're on the first floor apartment, or if you are renting a house. Did that answer your question, or do you have any more specific?
No, that was
Okay.
great.
Yeah.
Thank you.
Yeah. Yeah.
I also had, so you talked about the coverage for if like you're still having to pay your mortgage, but your insurance covers you living somewhere else.
Yes.
Is that still the case for renters?
Absolutely. Yes, that would still be your case for renters. And a lot of times, you're in a lease, you're still paying the lease, etc., but you have to live somewhere else. And most renters insurance policies, now most a lesser percentage of them than homeowners insurance policies, I can more safely say most homeowners insurance policies are going to give you those additional living expenses. Be a little bit more cautious with the renters because a lower percentage of them give those additional living expenses. So just make sure that the policy that you're purchasing covers you for additional living expenses.
Great, thank you.
You're welcome.
I think that is the end of our questions and the end of our hour. I want to thank the panel with some amazing presentations. And if you're looking at the chat, you're getting a lot of kudos in the chat as well. This is how you can reach the Office of Consumer Protection. And if you have any questions for us, please feel free to reach out to us. And again, a great big thank you to everybody. And we'll be stopping the recording now. And we'll have the